President Bola Ahmed Tinubu recently announced that Nigeria has already met its full-year revenue target in August, driven largely by a surge in non-oil revenues. Tax reforms, customs automation, and broadened compliance have powered collections past 20.5 trillion naira, with the government touting this as a landmark moment in its effort to diversify away from oil dependency. In fact, the government also claims that for the first time in recent memory, it has not borrowed a dime from domestic banks in 2025. Bold reforms have also won praise from international institutions and appear to have laid the foundation for a more stable, rules-based fiscal framework. We're seeing monthly disbursements, FAC, to states have soared, and there's growing confidence that Nigeria is finally creating a more resilient and inclusive base. Or is it? Behind the optimism lies a more complex reality. Nigeria's public debt has climbed to over 149 trillion and could hit 160 trillion by the end of the year, even as the fiscal deficit widens to 5.8% of GDP. These are the issues we need to discuss here. Joining me today to do so is Mr. Tilewa Adebajo, the CEO of the CFG Advisory. Good morning and great to have you back on the show after a while.
Thank you, Rolake.
Good to see you.
Good morning.
Yeah. So the Tinubu statements, and we all know what the statements are. My question, first of all, is this a fiscal breakthrough or is this a distorted revenue picture?
Well, let us take a look at the facts that we can gather from what we see. The budget this year specifies a revenue of about 36 trillion, and we are seeing a deficit of about 13 trillion naira. From the data available so far from the government sources, 5 trillion has come from oil revenues on a projected income of 15 trillion by half year. That's as of half year 2025. 5 trillion has coming from the oil revenues. And then we have another 14.7 trillion that is coming from taxes, which also includes oil tax revenues. So the figure you've quoted of 20 trillion, I think, is quite accurate, coming from the government official sources. However, the budgeted amount is 36 trillion.
Right.
So we're still way short of the budgeted amount of 36 trillion. And we have a deficit of 13 trillion. One of the key challenges we've had is the fact that the savings from the fuel subsidy is not being fully remitted by the NNPC. I think they're only able to remit about 50% of those savings. So I think that's the facts that we have on the ground right now when it comes to the revenue. So if there are any new sources of revenue that we're unaware of, then hopefully maybe we can get some clarification. But right now, I think there's still a shortfall. We still have about another 16 trillion to go. And if you go by this run rate of half year of 40 trillion, you're of 20 trillion. So
we should just about make it, right?
Well, you should be expecting maybe about 40 trillion by year end. So hopefully then maybe you can make up the shortfall.
Yes, indeed. Okay, so, I mean, to what extent, on the non-oil sector revenue, to what extent has the real productivity of that non-oil sector revenue actually been felt in the economy?
Well, it hasn't been felt it's been felt in the economy through a lot of things like inflation, exchange rate devaluation, rebasing, and adjustments. So a lot of what you're seeing now, because if you take a look at corporate performance also, most corporates have seen their revenues come back on stream, reflecting those adjustments with exchange rates and the inflationary impact on the economy. Because don't forget that inflation is running anywhere between 22 to 30%, depending on who you talk to. So those inflationary impacts are being reflected on the numbers. So you really have to discount inflation at about an average of 25 to 30%, before you now begin to take a look at the real numbers.
Absolutely.
So in terms of the real numbers, or in terms of the real revenues or the real exchange rates, then you really need to discount the impact of inflation on these numbers before you get some sort of reality.
Yeah, because I wondered how much was really around naira depreciation versus actual economic expansion. And so I think that was where my question was going. But well said. The government claims it's pursuing fiscal discipline, right? But we're seeing the debt numbers.
Yes.
In fact, the projections are 160 trillion by the end of this year. Help me reconcile this.
Well, let's go back from the historical perspective. In 2015, President Obasanjo negotiated with the Paris Club, and our debt was reduced then from about $30 billion to $5 billion in 2015. Fast forward 20 years later, our debt profile has hit $100 billion, or exceeding a record $100 billion. 60% of that debt profile being domestic and about 40% international dollar-denominated, mostly debt. We've come full circle. And if you take a look at the economic distortions of the past 8 years, the 32 trillion in ways and means financing has impacted the economy significantly. That has led to these significant distortions that you've seen. In the early days of this administration, they'd drawn down about 7 trillion in ways and means financing, and that impacted the exchange rate significantly. As you saw, we saw Naira moving from 700 to nearly 1,800. So, you know, by half year this year, we've gone to some level of stability. We've restored we've restored economic stability, but then again, restoration of economic stability and reforms is not enough to grow the economy.
Absolutely.
So we need to be growing the economy at about 8 to 10% per annum, and there's an inverse relationship between economic growth and inflation. So for us to see economic growth in Nigeria, our research for 30 years suggests that inflation has to be at least 12% for us to see economic growth at 8%. So as long as inflation is still about 20%, we can't grow the economy at 3%. So 3% is not there. And we've seen a decline. Fourth quarter last year, the economy grew by 3.8%. First quarter this year, it declined to 3.1%. So there's even a decline in growth. Now, to address the issue, the key issue that you must realize is that there's something called, after Obasanjo got the debt relief, there were some things what they call the financial circuit breakers that were put in the system. The first thing that was done was the Fiscal Responsibility Act. So the Fiscal Responsibility Act stipulates how much of your GDP.
I think it's 40%.
Yes, it is 40%.
We're at 52%, so we breached that already.
So you breached the fiscal. Thank you. So right now we've breached the Fiscal Responsibility Act from that perspective. It also says that all the borrowings must be used for human development and capital expenditure. We're borrowing to pay salaries. So that's another breach of the Fiscal Responsibility Act. So we've also done this medium-term debt strategy, which is quite a good one. But again, so what you are seeing is the fact that we also set up the Debt Management Office as part of that process. So the issues is the fact that now the Fiscal Responsibility Act needs to be reviewed because in line with the current realities of the challenges Nigeria has faced with its economy, so that all these things are in line. So what this shows you is the fact that there's critical need for fiscal review.
We're not out of the woods.
Yes, we're not. And fiscal discipline, I think, is also another issue. But I must mention also that the positive thing now is the fact that ways and means financing has stopped. And I don't know, despite what the president is saying, the positive aspect of the borrowing now is that most of it is done through the Debt Management Office with the capital markets.
Yes.
So there is a program of debt management which is quite transparent and it's market driven and it's through market securities. So you know the maturity profile of government instruments and you know the Debt Management Office is still actively active in the Nigerian capital markets today.
And in fact, it's really interesting because when we go back to Tinubu's statement, which sort of triggered all this, the point about no longer borrowing for domestic banks seems like a sort of moot point to me because actually that's not really the real issue. But also you mentioned the issue around the type of borrowing, capital markets, maybe even going towards diaspora bonds and more sort of ESG compliant type of instruments. But I want to peel back a bit on the medium-term debt strategy that the government has. Just looking at that, it's meant to sort of improve the cost of capital as well for the country. How effective are these sorts of strategies? The government also has a medium-term expenditure framework, which is meant to allow planning over a certain horizon. Given the dynamics of the economy, are these structures or mechanisms really that effective?
They are, but what happens is that government constantly breaches them. Because with every corporation, every company, like take a look at banks, for instance, banks have assets and liability management. Banks need to actively manage their portfolios. They have their risk management strategies. They have their risk management guidelines. I think the central bank also has prudential guidelines as to what you're supposed to do in terms of how you diversify. Asset managers use all these tools. So public finance is not very different. But when you have a situation where the government breaches all these things, then you have a concern, because the concern really is the fact that the government is spending more than they can, more than they're earning. If you take a look at the last 2 or 3 years, the cumulative deficit is now close to about 45 trillion naira. So, and you cannot continue to cumulatively increase your deficit without having a plan to be able to reduce it. So what you need to do is you need to cut down your budgets. I think we need to cut down our budgets up until a point whereby we bring inflation down to about single digit or 10%. Because if you discount inflation, food inflation and energy inflation, you get core inflation. If you take a look at core inflation in Nigeria, the key driver of core inflation is fiscal spending. So government spending is really driving inflation, and government really needs to take a break and play its own part in helping to lower inflation. And why I'm happy now is the fact that the Minister of Finance and the Coordinating Minister of the Economy has now been given the powers to be able to, you cannot make any expenditure until he confirms that there is funding to back that expenditure.
That's the true meaning of coordination.
Exactly.
Absolutely.
So I think
that.
I think that has been the most positive step, because that way you can now begin to control expenditure and spending, because he can now say, okay, well, this is not going to work because we don't have this, and then we can now begin to target the spending to the areas of priority. And that way you can help control inflation. So I think that has been the best news I've had in a long time. And that's the major step to bringing down inflation. Because if not, uncontrolled spending, unchecked spending is going to cause significant amount of problems.
And the other side of the pond will then say, but if we're going to significantly rein in our fiscal deficit, I think we're at almost 6%. What is the risk of undermining growth or worsening equality? I mean, I get it, because actually if you control inflation, it actually helps the economy. But there's the issue around worsening equality and all of that. What do you say? I think you sort of answered that, but what do you say to those who say, well, that could just make life more difficult for Nigerians?
Well, no, we've suffered for 2 years. So I think clearly my own conviction is the fact that given the trajectory of inflation, the central bank needs to give us a rate cut by Q4 of this year. We all deserve it, because businesses cannot continue to borrow at 30%. The essence of going through this hard period is the fact that we need to be able to ride the upside of this. And what is the upside of all this sacrifice over the last 2 years? And if government is not playing their part to be able to ensure that the private sector is active, because government is actually crowding at the private sector with funding. And the fact is that, that 50% of the funds are in CRR. So you are constricting lending, you're constricting growth to control inflation. So you can't continue on that path for so long. You need to be able to give relief for growth. And you can see the growth figures, like I've said, going down. So the only way to lift everybody out of this situation is to be growing the economy at 8 to 10% per annum. That way, we'll begin to all feel the impact. And then the middle class and consumption and everything can now return to that, because purchasing power now is at an all-time low.
Is it the 8 to 10% threshold, is that sort of the trigger point for the trickle-down economics? Is there sort of a globally accepted standard? Because I've forgotten what Nigeria looks like at 10% growth, what it feels like to be a Nigerian in this economy at 10% growth, whether I will actually feel it.
Well, we all did
pocket.
At a point in time. That was when a lot of people came back home.
Okay.
That was when the banks were giving you mortgage loans. The banks were giving you money to buy white goods. The bank were giving you car loans, and
was this late 90s?
Yeah, so everybody felt it then, and everybody understood that there was that awareness of things being right, and there was stable exchange rates.
Sure.
Exchange rates were like 200, 300. So we knew what Nigeria was then. And if you take a look at this data, like I've said, the data is specific to Nigeria.
Right.
What we did was we looked at inflation and GDP growth over the last 30 years in Nigeria, and we saw that the correlation was inverse. So,
of course.
So basically, is the data I'm giving you is specific to Nigeria.
Absolutely. So I think it's really interesting because when I follow some of what the IMF and some of these institutions say, the IMF has said that Nigeria is not doing explicit inflation targeting. So it's seeming to suggest that even though we're seeing some reprieve on inflation, that somehow we're still not doing it quite right. So does this raise questions in your mind about the sustainability of the inflation trajectory?
Yeah, I think this is a question I think I made a statement about 3 weeks ago where I said that the central bank urgently needs to start its inflation targeting program. The central bank had set up an inflation target of 24% for last year, which it did not meet. But that doesn't say that if you don't meet those targets, you do not regroup. So I think it's important that I think the rebasing of the inflation numbers I think caused a lot of distortions because not only GDP was rebased but inflation was also rebased. So, but I think the central bank should now actively start its inflation targeting program. I think that will give a lot of people confidence because it tells us what the expectations of the central bank is as to where they see inflation within the next 6 months. As opposed to the presidency talking about inflation numbers. I think, yes, the presidency has installed the central bank to take that role.
Yeah.
And I think they should take up that role more actively. But I think overall, I think we need to take a look at the Nigerian economy more as a holistic perspective because the biggest challenge to our economy is our fiscal problem. During the global financial crisis, we had about $20 billion in excess accrued accounts. And two governors, Fashola and Amici, went to court to challenge that this money must be spent, which was a grave mistake.
Yeah, today we're below $1 million.
If we had saved $10 billion then we would have, because we have a sovereign wealth fund that is supposed to have a stabilization fund. The stabilization fund within the sovereign wealth fund is only $100 million or less, and that cannot do anything with a 13.2 trillion deficit that you have. Unfortunately, also, you can see the excess accrued account is less than $100,000. So unlike countries like Norway, UAE, and Saudi Arabia, Norway has a sovereign wealth fund of 1.8 trillion, which returned about $250 billion in profits last year. So if we do not have those buffers to the oil prices swinging, then I think Nigeria it's going to be in trouble and I think for me, that's really where the issue is the fiscal side that has been the problem of Nigeria over the last 10 years.
Yeah, and maybe just a final word around the external borrowing, because just in terms of our exposure to FX rates, fluctuations, and other global volatilities, when we look at Eurobonds and some of the other external borrowings, maybe not the domestic ones, are you at all worried about some of the risks that may be posed by that type of borrowing?
No, not at all. I think even if we look at, although our borrowings are reaching the limits, without a doubt, and I think that it's important that we need to take a look at the headrooms in terms of our borrowing. But I think it's important to say that Nigeria is not at any risk of default at the moment.
Yeah.
But again, I think there's caution in the sense that we need to stop that borrowing. But why I'm comfortable with the international markets is that the international markets has a perception of your risk. As you know, our bonds are not investment grade.
Yes.
They're still at junk bond status. And that reflects the risk that Nigeria has. So what Nigeria needs to do is that we need to improve our credit rating and get our rating to investment grade.
Absolutely.
And I think that until you do that, you're going to be borrowing more expensively on the global capital markets.
Absolutely.
And I think that that's probably one of the best markets to borrow because there's a discipline to that market.
Yes.
And if the markets perceive that you might not be able to meet your obligations, then they wouldn't invest in your in instruments.
Yeah, and I think that's important because to a large extent, Nigeria's sovereign ratings determine the approach to corporates as well. But that's a whole nother, even some people think that's extremely unfair. But the final thing I wanted to ask you, many people who are sort of technocratic, maybe who run large companies, have expressed their confidence in these government's reforms and the fact that we've finally managed to achieve stability. Let's leave the trickle-down economics to the side. Does the average Nigerian understand that? And do you think these reforms have engendered public trust in the government's ability to take it to the next step?
Not really. And I think that's one of the biggest shortcomings of this government. The social intervention programs have failed significantly. With the Better Edu case, I think it didn't give the optics were very bad, and there was something that was stopped, and there hasn't been any way to address what sort of social intervention that one might look into. There are other indirect interventions they're doing in the education sector and all that, but all in all, when you're going through these sort of reforms, you need to be able to carry people along.
Absolutely.
While you've been able to instill confidence with the international business community, the local business community, it's also important that you have a human face to your reforms. And you need to be able to provide succor to the people, to your populace. And clearly now, the only way we can provide succor to Nigerians, because we've become a sachet economy.
Yes.
As you know, everything is sold in sachets now because of purchasing power erosion. The only way you can provide succor to people now is to actively reduce inflation. So if everybody is going to benefit in Nigeria, especially the large population of Nigeria of about 120 million Nigerians that are in poverty, the only way to lift them out of that poverty or to provide them succor is to get inflation to 12%. And restore the purchasing power.
Okay, fantastic. Great way to end. 12%. Wow, tall order, but I guess in your world, not impossible. Clearly, that's the direction we need to head in. Thank you so much, Mr. Tilewa Adebajo. Thanks for joining us. Great insights as always. Well, that's all we have time for in Business Week this week. I'm Rolake Akinkwegbe-Filani, but do join us online if you'd like to continue the conversation on X. Do have a lovely rest of the weekend. Thank you.